Hello everyone, welcome back to my YouTube channel. Welcome back. Today we are receiving more bad news coming out from the stock market. A lot of concern are growing as of right now. So the American people are now worried the possibility of the US entering a recession, and we are seeing signs that the US economy is slowing down. And not just recently, Fed Chair Powell commitment to raise higher interest rate within the next couple of weeks here. We are expecting another 75 basis point. Just recently, Fed Mester say, hey, the Fed gonna achieve this by raising the interest rate above 4% by early next year. And then they say, hey, we might pull back or stay or hold steady in next year. But as of right now, we are seeing financial risk and financial strain on the U.S. economy. We are seeing slowing investment. Many institutions are now restructuring financially, and some has gone really worse by declaring bankruptcy. That is how terrible it is. So, Cleveland Federal Reserve Bank President Loretta Mester said on Wednesday that, hey, the Fed gonna raise interest rate until they meet the 4% deadline. And that is their goal as of right now, according to Fed Mester. And she said the Federal Reserve is not hesitant to raise up the interest rate. And we are prepared for an economic turmoil and some financial pain ahead. Let's look forward. Some important data that came out today. And we did hear from Fed Mester spoke this morning. ADP data was released, folks. It was released. So in August, more than 132,000 jobs was added into the U.S. market, even missing economic forecast of 300,000 jobs was expected to be added in August. But however, we did miss economics expectation. So we did receive Chicago manufacturing PMI, which is around 52 point. That was our actual point, and our forecast, which is around 52 point here. So is this good or bad? Right now, we are seeing slight economic performance, but however, Chicago manufacturing data even seeing constraint here. We are seeing constraint and the limitation within the data. So that's what we're seeing: slow economic growth, slow economic performance, missed market expectation, especially with ADP employment report, missed economics expectation. Even though Chicago manufacturing PMI report a 0.2% differences, but however, that 0.2 is not really a big difference with the market. We are still seeing some pullback due to our recent ADP data that we have been seeing. Let's look forward. Chicago PMI data holds steady in August, which we have seen just beat economic forecast by 0.2%. So that's what we are seeing. However, slow economic performance is expected. And economic survey, Wall Street Journal expect the ISM factory index to slip to 51.8% in August from 52.8% in the prior month. So this is still what we are looking for. We are still waiting for our latest update coming out from the market. But Chicago PMI even represent the regional manufacturing within that region before the national ISM will be released within the next couple of weeks here. So a lot of stuff are coming out as slow economic performance continue to grow and progress moving forward. So job market did not perform very well. We did add some job, but did not meet economic expectation, and we are seeing signs of the U.S. private sector job growth is slowing down for the second month. This is a bad sign. Powell did warn of the possibility of financial pain along the way, and this is just an indicator of the U.S. entering a recession. We did, technically speaking here, we did enter a technical recession when the GDP fall consecutively within 2 quarters. That is a technical recession here. Market did not perform very well. ADP reported 132,000 jobs were added in the month of August, down from 268,000 jobs in July and 480,000 jobs in June. So we are seeing a decline in our economy, and things are continuing to progress as recession concerns are filling up. So that's what we are seeing. Let's look forward. So during this turmoil, we have seen many institutions did not perform very well, and Bed Bath and Beyond is one of them. So right now, Bed Bath and Beyond just issued some die warning for the economy, and they say, hey, we are struggling to meet the company demand and expectation, and as a result, we are planning to cut our workforce and to close some store across the nation. Also, we are planning to cut our sales outlook as a recession concern mount, and this is what we are seeing. Bed and Beyond did not perform very well. So really highlighting the bigger picture of where the US economy is headed right now. Also, offering up to 12 million share, which they are represented to sell, which we are seeing will represent 50% of the share currently outstanding. So the stock lay participant in the meme stock phenomenon slumped 23.2% this morning due to their recent data release from the company, and they say, hey, we are doing something very terrible right now, and that's what we are seeing. The stock did not perform very well, even reaching around $8.16 per share from all-time high. So that's what we are seeing. So right now the market is in a frenzy age, which we are going to continue to see more concern of a possibility the U.S. entering a recession. And they are planning to close about 150 locations across nation, and that's what we are seeing. This is a terrible news report. So also, its capital expenditure plan for the year was also reduced to $250 million. That's what we are seeing. So, this is the official data coming out from Bed Bath and Beyond. And they say, hey, we are closing 150 stores nationwide and laying off 20% of the staff. This is just an indication of a bear market coming along. So don't be surprised of seeing more institutions declare bankruptcy, because this is just the beginning, folks. This is just the beginning. Let's move over. Snap. Snap say, hey, we are struggling with the economy. We are deciding to lay off 20% of our staff. This is just the beginning, and more companies are now adopting significant cost measures, and Snapchat is just one of them. So 20% of their workforce right now will be laid off, representing 1,300 employees. So Snap say, hey, we are laying you guys off, and this is just what we are seeing. They even canceled some of their recent projects, such as Snapchat Show, Save for the Long Run Politics, and new series, Good Luck America. And they also put other projects in the attic. So this is what we are seeing. They even put game and mini app into main mode. It's also sunset the standalone Zenly and Voicey app to focus on Snapchat, SnapMap, and sound feature. So a lot of markets are not performing very well, and many companies are continue to lay off their employee as the trend continues to grow. Last but not least, folks, Amazon. So Amazon decided to close or plan to close two Baltimore area facility in Baltimore, with the possibility of displacing more than 353 employees. This is just the beginning of a significant cut measure are coming in, and we are continuing to see this as the Federal Reserve continue to restrict the U.S. economy here. So this is what we are seeing. And the end of what are my thoughts? As of right now, recession concerns are at all-time high, and many companies are preparing for the possibility of the U.S. entering a recession. And we are in a technical recession as for now, as the bear market continue to wipe across the industry. So in the end, if you enjoy watching my video, please click that subscribe button, and also don't forget to click that like button. Thank you, everyone. Have a nice day.